Welcome. Welcome for the lesson IFRS 5 Discontinued Operation. In this video, you are going to learn about what is a discontinued operation, the criteria that needs to be followed according to IFRS 5 guidelines for you to classify a operation as a discontinued operation. And how do you account for the discontinued operations in your company financial statements? How do you show it in the face of the statement of profit and loss? And how do you treat it in your statement of financial position? So in this video, first we will be learning about the theory, going through a cartoonic story, and then you will see a calculation that is done based on a real exam style question. So enjoy the video, do give me a like and do subscribe to the channel.
It's a shame we had to close down our maintenance center at Utah. Yet again, it didn't generate enough profits for the last 2 years. I'm a little confused on the accounting implications.
The maintenance center would be considered as a cash generating unit. Now that we have decided to close it down, it will be treated as a discontinued operation.
Discontinued operations? I haven't learned about that yet. What do we really mean by it?
A discontinued operation is a component of the business that we have decided to stop. This component could be disposed. If not, the component would be classified as held for sale. A discontinued operation could be a major line of business or an operation in another geographical location, or it could be a subsidiary that we have acquired exclusively with a view of resale.
Alright, so the maintenance center in Utah is a closure in a geographical location. The canteen in which we are planning to discontinue at our maintenance center would also be a discontinued operation since it's a separate line of business. And the investment in amazing beds will also be considered under discontinued operations since we are reselling it.
Yes, you're absolutely correct.
See, I'm a good learner.
Yes, indeed. You're a good student.
Tell me more. How would this affect our financial statements?
We will be calculating the results of the discontinued operation separately. So in the SOPL, we will only have one entry showing the performance of the discontinued operation, just below the operating profit from continued operations. This figure would be arrived by calculating the post-tax profit or loss of the discontinued operation and the gains or losses arising from classifying the assets as held for sale.
So the assets of the discontinued operations will be classified held for sale?
Yes, the assets of the maintenance center will be considered as a disposal group if those assets meet the recognition criteria. Now that we have learned the theory behind discontinued operations, let's do a small calculation and see how this is done in practice. Lee produced chocolate and toffees. However, halfway through the year ended 31st March 2009, the toffee business was closed off and the assets were sold off, incurring losses on disposal of non-current assets of 80,000 and redundancy cost of 40,000. The directors reorganized the continuing business at a cost of 100,000. Trading results is summarized as follows. You have chocolate and toffees trading results given to you. Other trading information to be allocated to continuing operations is as follows. So these are related to chocolate. In addition, the tax on discontinued operation was 14,000. So that's the tax on toffee. You're required draft the statement of profit or loss for the year ended 31st March 2006. Explain how an IFRS 5 discontinued operation presentation can make information more useful to the users of financial statements. And when you prepare the statement of profit or loss, the figures from the continuing operation is going to be shown on the face of the statement of profit or loss. Whereas the figures from the discontinued operation will be only showing one figure, which is coming the profit or loss from the discontinued operation. So on the face here, I'll be taking the figures of chocolate, which is the continuing operation. The revenue is 650, cost of sales is 300, Your distribution expenses is going to be 70. Your administration is going to be 120. Then under Toffee, which is the discontinued operation, 320 is going to be your revenue. Cost of sales 130. Your distribution is going to be 80. Your administration is going to be 100. So from the first paragraph, we have losses on disposal of non-current assets of 80,000. Now this is regarding your discontinued operation. So your losses on disposal of non-current assets, which is going to be 80,000, and redundancy cost of 40,000. So this is again expense related to your discontinued operations. So you take it under your discontinued operations. The directors reorganized the continuing business at a cost of 100,000. So this is a reorganizing cost. So the reorganized cost is going to be 100,000. Right. Then other trading information to be allocated to continuing operations is as follows. In addition, the tax on discontinued operation was 14,000. So tax on the discontinued operation is going to be 14,000. Then the finance cost from your continuing operation is going to be 17. Then you have your tax from your continuing operations, which is going to be 31. So we are done taking all the information. So now we can finalize our figures. So my profit before tax from my discontinued operation can be the operating profit of 10 minus 80 minus 40. So 110 loss, and your loss from discontinued operation is going to be 110 minus 14. So you have a total loss of 124. So here under your main financial statement, your profit before tax is going to be the operating profit of 100 minus the reorganizing cost of 100 minus the finance cost of 17. So that's going to be 43. The tax is 31. So you have the profit for the year. So the profit of the year is going to be 43 minus the tax of 31. That's 12. Now to this, I need to take the loss on discontinued operations. So I have a loss on discontinued operations of 124. So the loss for the year is going to be 12 minus 124. So you have a total loss of 112. Now that's the answer for the first one. The second one is to explain why is it important to show the results of the discontinued operation and the continued operation separately. It is because for decision making, if we know what is our results from our continuing operation, that is what's going to be the relevant information for our future, because the information from Toffee, they are discontinued operations. In the future, those results are not going to be there in our organization. So by presenting them separately, the decision makers can focus on the results of the continuing operations and take much more accurate information, disregarding the information from your discontinued operations. Alright guys, we are done with the chapter of discontinued operations. Let's meet up in another class, learning an entire new chapter. Accounting with Damien, signing out.